Hi everyone, today let's talk about GDP numbers, then we'll talk about the bank stress test, then we'll get into the economic calendar, as well as Max Payne for tomorrow. Then we'll get into the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So first quarter GDP came out and it was actually 2%, up from 1.3% at the previous report, once again indicating that the economy is still strong, and that was above all estimates, so much faster growth, and that continues to be a driver for markets to go at least a little bit higher. The biggest beneficiary from that was the Dow. It is worth mentioning that it's a slight slowdown from the previous quarter at 2.6% for fourth quarter of last year, but still a very healthy number at 2%. They also mentioned some revisions for PCE for last quarter. It was revised downward 0.1%, which is great. Inflation going down is always a benefit. And we are looking forward to PCE prices tomorrow. And if those come in a little bit cooler, that should be a nice accelerator for markets to go a little bit higher. They also mentioned that jobless claims fell quite a bit to 239,000, well below the estimate of 264,000. Moving over to the bank stress test. Everything went well, according to the Federal Reserve. The 23 biggest banks weathered a severe recession scenario stress test, once again ensuring that the biggest banks are not going to be the ones that failed. This isn't super reassuring considering it was the regional banks that were suffering earlier this year. But if the regional banks fail, that's not a huge detriment to the economy as a whole. If these bigger banks fail, that could crash the entire financial system, not just inside the United States, but globally. And it's good to see that they're still doing fairly well. They said the banks were able to maintain minimal capital levels despite a $541 billion projected loss for the group, which was meant to mimic a severe global recession, with unemployment surging up to 10% and a 40% decline in commercial real estate. So pretty significant declines across the market were simulated during this test, and supposedly the banks were still doing well. Moving over to the economic calendar, you can see that nice step up in GDP. Jobless claims lower than expectations. Pending home sales was a pretty big step down, which is interesting considering the strong home sales numbers that we saw earlier this week. Much lower than expectations there. And then Fed balance sheet offloaded about 20 billion. Nice little step down as they continue to sell. Moving over to tomorrow, don't forget, core and headline PCE at 8:30. We saw the revision down from previous read, which is good. But you'd like to see this come down lower than expectations as well. That would be great. Chicago PMI, also interesting. And then Michigan consumer expectations and consumer sentiment at 10 o'clock. Looking at the rate monitor, we're up to almost 90% chance of a hike in July. The stress test came back good, means the Fed can continue to hike rates. And everything is on track for at least 2 more rate hikes in my opinion. Moving out to January, we looked at this yesterday, and they are now projecting at least 1 more hike and hold at this level. So we could still see 2 hikes before this point and 1 cut. Now we're seeing at least 1 more hike and hold through January of next year. Moving over to Max Payne for tomorrow, stepped up a little bit, 435 now. We're still up here at 438 for the close on the SPY. We talked about a 440 or 441 close for tomorrow, potentially right at the top of the puts. Going back to some of the closes that we saw earlier in the month, 430 is my low expectation. 435, a nice little peak here for puts. 440, 442, fairly interesting. Wouldn't surprise me if we finished right in the zone tomorrow, which would be about a 1% move higher. Put call ratio, still very high, 2.95. Total options, 2.6 million, so pretty good close here for the end of the month. Moving over to the charts, starting with the S&Ps, we do have a grind up happening here on the hourly chart. You can see we're above all the EMAs and SMAs once again, closing pretty close to the highs. You like to see it as we continue to rally into tomorrow's session. You can see all these trend resistances sitting up here at 439 to 440. Like I said, I think we'll get into this zone, potentially close right at it. We'll see what happens. I'm still not super convinced on the longer time frame that this isn't going to set up a double top or a lower high, and then we'll potentially see that reversal and a lower low versus this previous low. But what we're trading right now is a slow grind up, and that should continue into tomorrow's session based on the options. Moving over to the NASDAQ, you can see we kind of sold off, got back into this previous zone that I've been watching, 360, 364.44 up to 364.84. We still held at the 55 EMA here on the 1 hour chart. I was watching this closely. If that level broke, I was looking to exit positions, but you can see we tagged it twice and it continued to hold. We're still right in this zone here. It looks a little bit weaker to me than the SPY. We're not grinding up, making new highs the way the SPY is. We are going sideways. Definitely looks weaker. Again, I think we'll get held up by the options, and then we'll probably see that sell-off coming through next week. Overall, neutral here on the NASDAQ, and I expect to hold this zone for the close for tomorrow's session. Moving over to the Russell and the Dow, you can see the Russell rallied super aggressively, hitting that next trend resistance, stalled right at that level, 186.55, selling off a little bit here after hours. Momentum might be fading into tomorrow's session. We'll see how that plays out. Overall, still looks good. We're back into this previous zone. You really want to see a breakout above that 189 if we're going to continue higher. Dow bounced off of that 339.11 level, as well as trend support. And now we're back above this highly traded zone, still looking for that push up to 343.23. Momentum still bullish. RSI pulling back a little bit, but still well above the 50 line. Moving over to some ratios, NASDAQ SPY and NASDAQ Russell, you can see we've been in this zone, starting to pull back further from those levels. Does seem like the NASDAQ is going to start to underperform here going forward. These are the daily charts, and you can see just how long we've been outperforming on the NASDAQ. And we're now at a pretty high level, and it seems like we're set to pull back at least a little bit on both of these charts. Moving over to Apple and Tesla, you can see Apple continues to grind higher. Can't say much about it. Continues to make new highs, new high close. Everything looks good here on Apple. Tesla, much weaker. Moved higher in the pre-market, sold off, ended up basically flat on the day. Again, looks like a lower high setup versus this previous high. Similar to what we've been talking about. Momentum fading, RSI getting close to that 50 line. And this might start to set up for a lower low, looking for a retest of 323.84. Moving over to Amazon and Alphabet, you can see they both sold off here. Amazon looking like a double top now, looking at yesterday's highs and the highs here from 22 June, looking for this trend to start to break down and establish a lower low. We're kind of right at this previous low. Looks kind of weak here. Momentum bearish. RSI also below the 50 line. Google, similar setup. You can see a series of lower highs. Looking to see this push below the 200 SMA here on the 4-hour chart and establish a true lower low. Overall, Amazon and Alphabet definitely looking weak. And if these bigger stocks start to break their structure, that should spell some lower prices for the NASDAQ. Moving over to staples and discretionary. Staples continuing lower. We talked about this structure breaking down here yesterday. It continues to make some new wicks to the lows. Kind of in a weird holding pattern now. We're still above this previous low, so it could establish a higher low off of this peak and continue to a higher high, but this still looks weaker than I wanted it to on this pullback. I wanted it to kind of hold in this zone and then rally back above 74, and I still want to see that before I look for any kind of bullish movements here. Overall, still holding on staples. Discretionary continues to hold at the highs, looks kind of stronger than I would have expected. Still looking for this to push up to 171. See how that plays out. Still holding at this level. Need a clear breakout for that push, but momentum is fading. RSI kind of neutralized here. Slightly bullish, but still below its peaks. Moving over to energy and financials. Energy continues to look good. We talked about this running about 2 days ago, I think. And it continues to do so, hitting that 80.63 level. Been watching that level for a while. If it breaks here, we can start to look for a push up to 83.55. That would be a nice move. Oil and gas also making a similar move here. Financials rallying off of the good GDP numbers, as well as the good stress test results. Momentum, bullish, RSI hitting overbought conditions, pulling back a little bit. But overall, this is a much higher low setup, and you would expect this to rally above this previous high, in my opinion. Moving over to transports, you can see we basically went sideways, holding at this zone through some wicks here. Does seem to be running out of momentum. Still a higher high setup. Could be looking for a higher low down around 243, testing this previous high and then rallying off of there. Momentum on the weekly, still very bullish. RSI also pushing higher. We are right at these previous peaks, so we could find some resistance here. Again, looking for maybe a shorter term pullback and then a rally. but overall still looks good here on transports. Moving over to breadth here on the 50 and the 200, both rallied here again. 50 making a new high versus this previous rally, looking to take out the high from 15 June. Similarly here on the 200-day average, looking to take out that previous high. Overall, both of these look good going into tomorrow's session. Moving over to the dollar here on the 4-hour and the daily, got another rally, well above my 102.89 level, now looking for 103.64. We're above all the EMAs and SMAs here on the 4-hour chart, definitely looking like a higher low setup, rallying to a new high up to the 200 SMA. On the daily chart, up at 104.95, looks nice. Momentum flipped to bullish, RSI looks clean here, overall dollar strength. And if this continues to rally into next week, maybe we'll start to look for a bigger pullback in equities. Moving over to JNK and TLT, you can see JNK, this rally that we saw yesterday didn't really materialize. We gapped up kind of here in the pre-market and then came back down and retested the 9 EMA as well as VWAP back into this mid-range. Didn't take out the high yet. Doesn't mean we're not going to, but momentum is fading now. RSI certainly could bounce from this level, hitting that 50 and then start to rally. That would be interesting. But right now we're more in a holding pattern on high yields. Looking at TLT, we talked about this looking at quite a bit weaker after multiple tests at 103.70. And then we ultimately got a bigger breakdown below 102.50 now. And this looks much weaker back in these previous lows. Huge volume, big step down. Not great here on TLT. Moving over to the volatility indices, starting off with the move, rallied here today as bonds fell. We just saw that on TLT. VIX, not much, went sideways here, holding in this zone. Still at this previous low from 9 June. Not much to say, still holding up. RSI looks weak, momentum, could argue it might be stepping down here, but overall still going sideways in this zone. Moving over to my accounts, you can see I'm basically flat from 2 days ago. Made back some of my money protecting myself with some covered calls. On my Q position, IWM has been fine. I rolled these puts up here, got a little bit more credit. I expect that to be fine tomorrow. I'll be watching for a little bit of a rejection from current levels on the IWM, but overall still bullish. Qs, still holding those covered calls, rolled those out again as those continue to be profitable here, at least a little bit. Like I said, overall neutral going into tomorrow's session, and then I think we're probably going to see some sell-offs into next week. Let me know down in the comments section what you think of the GDP numbers or the bank stress test. Is everything still good in the markets and we're still going to head for new higher highs, or are we starting to see some exhaustion? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.